Just time for business then. Matthew's here today, and we've talked an awful lot about Spain in the last few days, but Italy also causing some concern.
Yes, it is. That's right, Stuart. I mean, Italy is the Eurozone's third largest economy, and let's not forget in the first 3 months of this year, it shrank by 0.8%, twice as much as Spain. So it's also causing jitters, and their bond yields were up yesterday. Now, bond yields are quite a good way of seeing the sentiment about an economy, and they got up to as high as 6.28% yesterday. So they're having trouble raising money. They're going into the bond markets today to raise and tomorrow to raise around 11 billion euros of bonds. So we'll see what happens with those.
Italy's Prime Minister, though, he's insisting the country does not need a bailout.
No, he's been insisting that they don't need a bailout. He was partly responding to comments from the Austrian Finance Minister, Maria Fechter. She said that perhaps Italy might need a financial rescue because of those high borrowing costs we were just looking at. Well, that angered the Italian government. The Prime Minister, Mario Monti, yesterday was saying that he feels that the decisions leaders are taking right now will bring stability.
The decisions that we have taken show that the European Union has the capacity to make important choices that live up to the expectations of the public opinions in our countries, even more than those of the markets. We continue and will continue to work to guarantee financial stability in the Eurozone with all the instruments at our disposal.
So there you go, that's Italy. But Spain also still a key concern for the markets.
Absolutely. After that bailout, which was supposed to calm the markets, we've also seen bond yields shooting up for Spain. They were up at around 6.8% yesterday, getting close to that quite dangerous 7% figure when in the past other countries have needed to have full bailouts. The Prime Minister there, Mariano Rajoy, he'll be in Parliament this morning talking about the challenges the country faces.
Now, yesterday, Angela Merkel, she was defending the softer terms of the proposed Spanish bailout.
Yes, that's right, because, of course, they're not going to be expected to have the same kind of stringent supervision that other countries have had. She was talking about that, but she was also saying that what she wants to see is deeper integration by Eurozone economies and in decision-making.
Those conditions for Spain would not be as far-reaching as those for countries like Greece and Portugal. And we have to make clear again and again that we want Europe and we want more Europe. But I want a Europe where we have a common control and common responsibility in one hand.
Well, those fears about Spanish banks aren't just spooking the markets. Ordinary savers are also getting scared. Some are deciding to put their money elsewhere.
The number one topic of conversation for many people in Spain is the EU bank rescue. How come they're bailing out banks when people themselves have to tighten their belt?
Saving the banks doesn't make sense. They got us into this situation.
Well, some are talking, others have decided that actions speak louder than words. Miguel here has withdrawn his money.
I didn't have millions, but even if it is only a small amount of money, it's mine. I worked hard to get it and decided to take it out.
Press reports in Spain say 1 billion euros has been withdrawn in under 10 days, with sums leaving Bankia especially. The banks are denying that. Investors are switching to foreign banks. 97 billion euros has gone abroad this quarter. That's a record. These savers are trying to get a hold of their money and are hoping this association will help them. 1 million Spaniards are believed to be sitting on toxic bank assets without realizing.
30% of my money is in shares, but we don't know their value, and I can't get access to the rest of the money for 10 years. It's totally crooked.
People are worried and angry. The cost of saving Bankia, for example, is equivalent to double the cuts to the health and education budgets.
But despite all the fears that we've just expressed, markets were in a bit of a better mood yesterday.
They were. Now, what's driving that is a bit of a feeling that perhaps central bankers are going to give some stimulus to the economy. So we can see that in the Wall Street figures. They were all up. All the markets there doing plus 1% and more. And in Asia, let's take a look at how things are going there. Also, it's been a choppy day, but in general, markets are all rising. Well, now let's get some more of the day's company news. And the parent group of British Airways and Iberia is putting its expansion plans on hold. IAG said the appeal of mergers had faded due to the economic downturn. BA Chief Executive Willie Walsh said the group's enthusiasm to buy Portugal's TAP airline had significantly waned.
The boss of the American investment bank JP Morgan will apologise to the US Senate today. Jamie Dimon will be answering questions about the bank's multi-billion-dollar trading losses last month. Dimon expected to say he is sorry for the losses. He will claim the problem due to traders being poorly managed.
And ratings agency Moody's has downgraded two of the biggest banks in Cyprus. That news comes one day after the finance minister said the country would need a bank bailout by the end of June. Moody's said the downgrades were the result of the bank's high exposure to a possible Greek exit from the Eurozone.
Talking of Greece, under the terms of its bailout, Greece has agreed to privatise a large chunk of state-owned assets. Political turmoil there has brought the programme to a halt. And as Greeks go to the polls on Sunday, there are hopes more certainty will get the programme back on track.
Privatisations in progress. Or are they really? Greece promised to sell billions of euros worth of state assets when it received a lifeline from its peers in 2010. The government set up a fund last summer to oversee its fire sale, hoping the programme will not only raise money but contribute to economic growth.
The impact of privatization is 5% more growth in GDP and about 200,000, 50,000 new jobs.
Banks, energy firms, airports and even the police headquarters in the capital. Dozens of state-owned businesses, properties and infrastructure assets are up for sale. Many Greeks agree attracting foreign investment is crucial for the country's survival.
I think that if there is some investment, there will be more jobs. Because Greeks will be here to help in this job. It will be good for everyone.
But it's still a Leviathan task, and the ongoing political crisis isn't helping. With investors holding back their decision amid prolonged electoral uncertainty, the massive privatisation programme has been stagnant. Greece's ambitious plan to raise 50 billion euros by 2015 through state asset sales has always been in doubt, and political stability is desperately needed for it to pick up speed.
Now, finally, we're beginning some figures. Passenger numbers, British airports, reflecting the economic downturn.
Yes, because actually airport traffic's a really good indicator of what's going on in the economy. Now, Heathrow in London is Europe's busiest airport. Last month it handled 5.8 million passengers, down very slightly on a year before. But if we look at certain southern European destinations, we see that in fact the numbers have been falling quite dramatically to those from Heathrow. So to Greece, for example, down 11.3%, and Portugal pretty similar as well. Even Spain, that favourite holiday destination of many people coming from Britain, down 2.5%. Another indicator that's also very important is that of cargo traffic. That's down 2.4% across all the airports that BAA runs in the UK, down 3.8% just at Heathrow there. So quite interesting to see what's happening, particularly as we're approaching summer months there.
Sure, exactly.
To those traditionally very popular destinations.
Yeah, see what happens with the holiday traffic as well. All right, Matthew, thank you very much. Matthew with the business. He'll have more, of course, in just over an hour's time. Claire's got the latest news next.